Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, and we're sitting here now at the 26th, believe it or not, of September, 2023, 6:05 p.m. Can't believe we're already into the fall, and here we go. We're about to march into the month of October. Pretty soon there'll be snow on the ground. It's going so fast. There's late word, that the Senate is very close to a bill passing there, combination of Republicans and Democrats getting together. But I think it's dead upon arrival in the House unless Speaker McCarthy in the House wants to get in some real problems. It appears it's going to fund the war in Ukraine. It's going to keep spending about where it's at. Those are two very big no-goes right off the bat for the far-right element, the troublemaking Republicans that he's going to have. So if he brings it there and it passes, as an example, a call for his under the terms, a vote as to whether he can stay in office probably comes up pretty fast. So I don't know what he does. And I think anybody trying to second guess this it's beyond them. Politics is politics. They play dirty. They play to the last minute. At best, they're trying to get this program would only be for 45 days so they can buy more TV time, if you will, as they negotiate things. Where have they been for the past 3 months? I guess on vacation. So, tech stocks, have you watched? They've given up about 10% of their gain. They were the leaders. They got hurt there. On the energy markets, we're starting to see that the rebob gas came back up, natural gas up, and you're still holding it very nicely in the 92 plus area in December Brent and $90 in November WTI. The big question is the 95 level here. Can eventually Brent get up to the 100 level? Who the heck knows? But that's the game. We're finding some support. I'm noticing it as I'm seeing it over and over on the charts. I don't know if you use pivot points, but I use pivot points during the day, and I like to get an idea as to market into a support resistance zone. I'll talk about them in a minute or two here, but they were giving me some inkling as to what I was seeing through there. In the gold and the silver, gold was trading for a long time in the 1920 to 40 area. It's been giving that up as it's working itself a little bit lower. Copper, the big problem is that the big property companies are under tremendous attack now financially. And as this is taking place in the situation where they're missing payments on debt, people are saying, well, how can copper get a bid out there because the economy's in such turmoil? I agree. And copper slipped back into the 364 level. And as I said to you before, I can make a case for lower gold. It doesn't take much to do that, especially if interest rates stay this strong. So when we take a look at the gold market, the one thing that you look at is where are you in relationship to this red line, which is the 18-week moving average of closes. When you're under it, just look at it this way. Your bias is down. When you're over it, your bias is up. Markets often like to come up and test these numbers to see can they poke through them. And if not, then the question is how much do they correct? You came down, tested the zone here, you went back up. Now you've had a couple of zone tests of that number and haven't gone anywhere. When we come to a daily bar chart, you're starting to break through the areas. Now, we pointed to this before, and I'm going to point to it again. This was the last break low, and the market held in there. As I stand back, you don't have much more to hang your hat on from that point. So as I look at the market, the trend is down. You're staying under the 18-day average, therefore the bias is down. The market fell today to the lower Bollinger Band. Stop there. Isn't it magical how that works? If you've taken my course, you understand why and how. And now the question is, while you're oversold, can you hold this area to get another bounce in the market? I don't think you attract new money into a short position when you're in oversold condition. Oversold, I define as the readings of the slow stochastic under 30. In the gold silver, as long as prices stay over the 18-day average, I'll keep this as gold because it means gold is stronger than silver. And as the numbers climb, you need more ounces of silver to get 1 ounce of gold. When we take a look at the silver chart, you can see how the market is sitting here, higher high, lower low, doesn't have a real trend to work off of. In the copper, you're now very oversold. This is called a gorilla glue trade. And it happens when price locks onto the lower Bollinger Band or the upper one. In this case, it's the lower black line. And when it does that, you go either side of that line, but you hug it and you force the market into first an oversold condition. Then if things are going to get really nasty, embedded, where both the blue and the red lines are going sideways under 20 for several days or more. You're not at that point. You're just in an oversold condition. In the platinum market, finally, the market is paying attention to what I said. A week ago or so, week and a half ago, as the strike was beginning, I said, I don't get why platinum and palladium are up. Pretty soon, you're not going to need U.S. catalytic converters. And those converters in other parts of the world are still used, but here they won't. And boom, the markets are responding to just what I said. Trend down, bias down. Now, if we take a look at the market, you're getting very close to oversold. You're there, in fact, with the 25 reading. I'm not looking for a lot more than strength at the lower Bollinger Band. And no, I would not be telling clients to deploy new money here. And in the dollar index, it just wins. And as it wins, it's creating havoc for everybody around the world. And as interest rates in the U.S. keep climbing. Today, I saw that the Jamie Dimon, 7% could be where these rates are going, the 10-year. Can you believe it? It's 4 or 5. Could it go to 7? I don't know, but he's a pretty smart banker. And if it does, doesn't that change the economic landscape in a monster way? I don't know if you saw today, the housing. Case-Shiller came out and markets erased the loss of the year in housing prices, but that's because there's nothing for sale. People have taken their existing homes off the market. Now, where there are homes for sale, the builders have a stock. Their amount of homes went up 5 months on average. So they've got whatever homes they have, you can call them, you deal with them. They help you buy down a year or two of the mortgage. There's ways to do this. Doesn't mean it's out of their pocket. It could come out of the purchase price. There's many ways that you do all this. And the idea there is rates and mortgages won't stay this high for that long. No, I don't think most of us think we're going back to 3%, but they could easily go back into the 5% area. And that's what you hope that happens if you're buying a new home and you're using the word refinance. Make sure you have that ability if you buy it. Also remember, in many FHA loans, not the jumbles, the smaller ones, those loans are assumable. So check with what you've got there. The used market on homes instead of cars, used market on homes. There's something of interest there. Now, one of the things that I use, and you heard me mention it, were these pivot points. You probably have this software. If you're using good charting software, you have it. Now, what it helps you do, and I'll come right over here, is this is the pivot. And from the pivot, there is a formula that's built into it. It's not unique. And you're finding in there areas to sell and buy on the break. It's only good for the daytime. That's the whole idea here. You're hitting and running with it. They'll end up looking this way. So you get your white pivot, and then you get what's called the support lines, S1, S2 as they come down, and resistance. They will be called this, R1, R2. Think of those as your sell. So what traders are looking to do is, where can they get short the market to fall back to the pivot, or where can they buy it to get up to it? What I do a little different is I do look at it for, maybe I should adjust entry point on positions I want to take on, positions, not for day trading, for my clients to have positions in the market. And I mix it with what you see back here. You got it. My good friend, the slow stochastic. When the two come together, I have a really interesting chart. So what I did to teach you this, and that's what I want to do, is teach it. It's free. It's video series, 3-part video series. You go to our website under pivot points. You can move it right here. Your cursor, you'll get that. Go to the Arun indicator as well. Take the free, got that courses on both. Learn time, how it leads price, and as price momentum goes up and it starts waning, how the rune indicator teaches you how to work with it. Another free video series. That's all under our free offers. IraEpstein.com, free offers, just take them there. I'm Ira. You have a great day.